Hey guys, what's up? This is Ace coming to you January 16th, 7:58 p.m. Pacific Standard Time. We are in 2021, so Happy New Year to all you guys. I know it's been a little while since I've made a video. Got wrapped up with family during the holidays, and then of course into the new year, been busy with trading and with my job. But I did want to make a video to kick off the new year, just so you guys know I have a lot of great content that is going to be coming to my channel. I have been brainstorming all different kinds of things to bring to you guys to help you in your trading journey and to help you become better traders, more profitable traders. So be sure to go ahead and subscribe to the channel because good things are on the horizon for this year coming from your friend Ace. So in this video, I wanted to go ahead and give you guys an idea of how I like to build out my watch list. I've been asked this many times. How do I know which stocks I want to look at? Is it the same stocks week in and week out? Do I look for new stocks every week? Some really great questions. So this video is kind of going to follow in that path. Being an options trader is a lot different than being a stock trader in the sense of, since we trade these contracts like you see here on the options chain, we need to go ahead and have three things in a stock that allows us to go ahead and trade the options on that stock. One thing that we need is an active options chain. So the options for Apple, for example, are very active. You'll see that there's lots of open interest, there's lots of volume. Open interest are basically current orders that are on the options, and volume are new orders coming into the options. So you'll see on the 126 strike puts, we have 5,774 current positions on that strike, and we had an opening of 8,053 new positions on Friday. Okay, so when you look at these kind of numbers in the open interest and the volume category, that's telling you right there this is a very, very active options chain, and these options for Apple are very highly traded, and that is criteria number one. Criteria number two is we need liquidity, and what I mean by liquidity is we need them to be liquid. Very, very, very tight bid and ask spreads. Okay, you'll see on Apple on the 127 call strike, we have a spread of 229 by 221 or 221 by 229, either way you want to say it. And what we're looking at here is a spread of 8 cents. It's 8 cents difference. Okay, in the options world, you have to multiply everything by 100 in case you're not aware. So if you're looking at 229, that's actually $229. 221 is $221, and the 8 cent spread is $8 spread. Okay, that's a very tight bid-ask spread. That $8 in between is what's called slippage. And all slippage is, guys, is the difference between the bid and the ask. And when you execute that position, that you're going to actually go into a loss for that amount immediately the minute you open the position. So in this example, if I opened up a 127 strike call option long on Apple, I would be buying in at $229, and if I went to sell it the second after I opened it, I would be selling it for $221. So I would literally lose $8. So that's what slippage is. Okay, so what we want to do is make sure the ask and the bid spread is so tight that we pay the least amount in slippage as we get in and out of the contracts. And also, once again, we want to have very liquid contracts so we don't have a problem getting in and out, which is great when you see, like I said, this kind of volume and open interest. Okay, the third thing we need to have is volatility. We need to have this stock move. Very, very important. Okay, we can get that in one of two ways. One is you can look at the beta of a stock, which is right over here. And all a beta is showing you is showing 1.25. All this number means, guys, is this moves 1.25 per market movement. The actual market, being the S&P 500, moves at a figure of 1. So if I typed in SPY here, for example, SPY is 1. Okay, so if you have a stock that is at 1.25, that means that it's moving 25% or 0.25 more than the underlying stock. So that means there's more volatility, there's more movement. Okay, if you look at something like, I don't know, what's really slow? Maybe Ford? No, Ford's actually got a pretty good ATR, or excuse me, a beta. Facebook. Nope, Facebook's too, gosh. Trying to think of something that's a little bit of a slower mover here. Oh, Procter & Gamble. There we go. Yes, so Procter & Gamble has 0.39, which means that it moves much, much slower. If the market's moving at 1 and Procter & Gamble's moving at let's just call it 0.40, we'll round up, it's moving almost half of what the market's moving on a daily basis. Okay, so that's the kind of stock you're not really going to want to day trade. Maybe you want to invest into it for a long period of time, but definitely not day trade. So anyways, getting back to Apple, you have two ways to look at how volatile or how much movement a stock might have. One is the beta, and the other one is called the average true range, and that's what we're going to focus on here. Okay, and I'm going to explain how that ties in just a moment. But for now, let's go ahead and see how we build out this kind of a list and where we meet the first criteria, which is active options. We can go to a website called barchart.com. I would highly recommend you guys check this out. If you've never been here, there's a ton of great free information on here that you guys can go ahead and take advantage of. Look at this. They even have an unusual options activity section for all you guys and gals that want to know what the UOA is in the options market. Here it is right here. So what you're going to do is click on the options tab, and you're going to have a whole bunch of different selections and a bunch of different things you can look at in regards to options. I highly suggest you come here and play with this stuff. It's very cool. But for our purposes, we need to meet our first criteria. And our first criteria is active options. Who's buying and who's selling options right now? So we can go to this list, most active options, bring that up, and it's going to give us a list of the most active options right now. So we have Apple, Tesla, NIO, AMD, Facebook, Amazon, which is my favorite. You guys are going to notice a lot of very similar names. Twitter, or I should say familiar names. Twitter, Nokia, Virgin Galactic. Anyways, what we're looking at here is we have this sorted by options volume. So with Apple, for example, Apple has right now 1.7 million in options volume. Okay, that means there's a lot of people buying Apple options. They're buying and they're selling Apple options. It's very, very active. Here's Tesla with 1.2 million, very active. NIO with 839,000, very active, so on and so forth. Okay, so one of the things that would make our life really, really easy is if we could just go ahead and screen this list to average true range. Average true range shows how much a stock is moving within a given time period. Now, we could do that on this platform. However, like everybody else, Barchart wants to make money, so unless you're willing to pay for that functionality, you don't get it, okay? We're going to go ahead and do a little bit of a workaround, or as I like to say, we're going to MacGyver it, okay? So for all you people who know who MacGyver is, maybe I just aged myself, but if you know, definitely throw it down there in the comments, because that'd be great if I was the only person who remembered who MacGyver was. But anyways, we're just going to go ahead and, we're going to select from this row all the way up, and we're going to grab all this data and we're going to copy it, okay? And then we're going to come down here and we're going to pop open an Excel spreadsheet. And this Excel spreadsheet, we're going to then paste that information here. So we're going to highlight everything and we are going to paste in that data, okay? And here it is. Now, we do want to go ahead and clean this up a little bit. We want it to be text only. So you're going to come down here to paste options. You're going to go over here to this selection, which is match destination formatting. We're going to click OK, and it's going to give us text, which is exactly what we want, okay? Now, guys, if you're using another platform outside of Thinkorswim, you might have to download all this into a CSV file and then upload it into your watch list. If you do have to do that, get rid of rows B through K. Just clear contents. Row A is really all you need. Whether you're going to be doing this on Thinkorswim, like that's my platform, that's what I'm doing this on, or if you're doing it on another platform, you only need row A. You're just looking for the tickers, okay? But for Thinkorswim, we can actually copy and paste this into the watch list, which is pretty cool. So we're just going to go ahead and copy this. We're going to select all, by the way. So you're just going to click on A, this top thing here. It'll select all of them. Copy. I'm going to drop this down. I'm going to drop this down. Now, I already have the watch list set up, but let me just show you how to do this in Thinkorswim. We're going to go to Edit Active Options. We're going to remove everything. Okay, so when you set up a brand new watch list, this is what it's going to look like for you guys. Okay, so you just come over here and you go Edit Active Options. You're going to import, okay? You're going to click Import, and then you're just going to paste symbols from the clipboard. Remember, we copied it out of Excel, so it's on our clipboard. We just push this button, and look at all those symbols appear right below there. Okay, we click OK, and all the symbols appear right into the watch list. Super easy. And then we click save, and there's our watch list, guys. Okay, so now we have covered the very first parameter, which is active options. All these options are considered active because they're appearing on the active options list from bar chart. Second thing we need to do is let's see how liquid these things are. Can they be traded? That's going to be important. So let's go. First one here is Amazon. Amazon, I'm going to go over really quickly because most people can't trade this or don't trade this. It's a very expensive stock, 4,650 by 45.15. It's about $135 spread. That sounds like a lot of money, and it is a lot of money, but it's really not when you're going ahead and you're looking at a stock that you're buying into an at-the-money call option for $4,650. $135 becomes a very tight spread. Okay, keep in mind also, you always want to try to get in at the middle. So even though there's a $135 spread here, you're going to want to go ahead and try to get in at $67.50 slippage. Okay. Once again, sounds like a lot of money, guys, but keep in mind you're trading a 4,650 by 4,515 stock that moves an ATR of $69.49 over a 20-day average period. Basically what I'm saying, this thing moves. $67 is not going to mean a hill of beans to you. So that's considered a tight spread here, okay? So it has liquidity. Obviously, it's active. Look at all the numbers like we talked about in open interest and volume. And then the last part, and I'm going to explain this now, is the average true range. I use a 20-period ATR. Now, you guys are probably familiar with the ATR. I'm going to move these off the screen here for a second. When you see ATR here on Amazon, down below, here's the average true range. You see that it's moved $69.48. Now, I have my ATR set to 20. So this is a 20-day average. So over the last 20 days, this stock has moved an average of $69.48. Okay, so what I've done is I've just taken that data and I've literally thrown it into a column on my watch list, so I don't have to literally open up every chart to see that data. It's right here for me. Okay, now on Amazon, $69.49 on a stock that's $3,104 that has 5 wide strikes. That's very liquid. You could definitely get into this intraday and find yourself a move of $15, $20, $30, no problem. If you were to go ahead and let's say do a $30 move, that's 1, 2, 3, 4, 5, 6. Theoretically, you can go from 46.50 to 59.15. This is not perfect science by any means. It's an idea, a ballpark, an idea of what you could make, and you're looking at $1,265 for that move. And that's a very realistic move considering what the average true range of the last 20 periods is for Amazon. Okay, let's go to a stock we can digest just a little bit easier because Amazon's a big boy. Here's NVIDIA. NVIDIA is $995 by $960. So that's $995 by $960 with a $35 spread. Okay, that is liquid. That is very, very tight. You can get in the middle at $17.50. So it has met liquidity. That's one of our parameters. The second one, is it actively traded? Open interest, lots of open interest. Volume, lots of volume. Same here on the call side, which means this is an actively traded stock. Once again, why it appeared on the bar chart list. It's actively traded. Now it's met 2 of the 3 criteria. Is it volatile enough to give us movements intraday so we can go ahead and we can make our money? Well, it trades an average of $16.60 a day over the last 20 days. That is very, very good for us because we can get in. It's got a $2.50 wide strike, and we could go ahead and let's say we ride this thing $10, which is very well within its average daily range of $16.60. So if we go 1, 2, 3, 4, and we slide to the left, 15.25, that's a $10 move. Now, once again, this is not perfect, but it's close. It's enough to give us an idea of what we could make if we were to get a $10 move and we bought the at the money strike at $995. We could go ahead and make 1, 2, 3, 4, 15.25 minus $995. That's a $530. That's a potential approximate ballpark. Once again, I keep saying that because I don't want anybody to think these are exact numbers, but it's approximately about a $500 profit move. If you can get $10 move on NVIDIA intraday with a $16.60 average daily range, you can make on a $10 move about $500, okay? Anyways, guys, I don't want the video to go too long, but that's how you build out your watch list, okay? So once again, go to bar chart, download the data into the Excel spreadsheet. From there, go ahead and import it into your watch list, and then go through your strikes, go through your options chain, look at your liquidity. Then from there, once you see it's liquid, make sure it's being actively traded. All these should have really good volume and open interest because they are coming off of that bar chart. As we said, that bar chart list here. Okay, so all these should be very actively traded. And then the last thing you want to do is pop the ATR onto your watch list. Make sure that you have a good high ATR. My bottom, the lowest I'll go on ATR is $4 because I like to trade intraday. So I want at least something that's got a $4 move. So like if we looked at Qualcomm, for example, as just the last one to finish up with, super tight spreads, $10, 239 by 229 with a $10 difference. And these things are really, the strikes are tight. They're only $1 apart up till here. Here we go to 250 apart, and then below that's $1 apart. So even at 250 or $1, you're still having an opportunity to go ahead, and if you were able to go ahead and get a $5 move, your 550 by 239, you're looking at least a 200 and some odd dollar profit for a $5 move, and you got $4.21 on average. So maybe you get 150 or 125, $150 if you can get in, and you can get towards the top end of that range. Once again, that's why I limit mine to $4, and I don't play with the $4 too much. Most of the options that I'm trading intraday are more in this category. They're in the double digits, 10 and above, okay? Guys, if you're swing trading, you can use this as well, because whatever works for day trading is going to work for swing trading. You want liquidity, you want activity, and you want volatility, because even if you're holding for a week or 2 weeks or 3 weeks, you still want the opportunity to be able to get that wide range of movement and make your money day over day. So anyways, guys, I hope you enjoyed the video. I didn't want it to go too long, so I'm going to end it here. If you liked the video, please smash the like button. Please subscribe to my channel. I have a ton of new content coming out this year. I'm going to be putting out there to help you guys, educate you, teach you new strategies, teach you indicators, teach you some of the things I'm using every day to make money in the market. And then of course I do have my highly anticipated video coming out, which is the follow-up to my smart money video, how to spot and follow the smart money. That's my most watched video on YouTube. If you've not watched it, by all means go into my channel, check it out. Part 2 is coming, where I'm going to actually show you how I spot and follow the smart money, which platforms I'm using, and how I am able to go ahead and see where the big guys are positioning their money and ride their coattails. Anyways, guys, this is Ace signing off. Thanks so much for watching. Have a good night, and I'll check you guys soon. Take care.